All right, welcome everybody. Today presenting is going to be Brandon. Um, he's going to be covering key person insurance. So Brandon is born and raised in Vallejo. He's a husband and a father of two. He prides himself on helping others in his community. Brandon is also a martial arts instructor in Vallejo for the past, 20 years now. Outside of Truvier, Brandon is a partial owner of a consulting company that assists up and coming mixed martial artists build a business for themselves so that they can have something for themselves after their fight career is over. So without further ado, Brandon, take it away.
My brother, thank you. Hi guys, everybody. Thank you so much for joining us on this Wednesday night. So let's get right down to it. I wanted to speak to everybody about key person insurance, key person equity and protection. Just making sure my small business owners specifically are aware of something that can, be used as a risk management tool for their business, right? So let's get into it. So what are we looking at, right? We're defining this strategic asset that we need as, or we all should have as small business owners. Institutional risk management. Key person insurance is a life or disability policy purchased by a business on its most essential talent. Essentially, what we're doing is we're purchasing a life insurance policy from our business to in the event of one of our, key employees or you as the CEO, you either fall ill or pass away, knock on wood. We have something in the wings where there's a benefit or a death benefit, or a pool of money, so to speak, that can be used to keep the business going in the interim while we're looking for a new employee or we are looking to replace some revenue, things of that nature to keep the business going in the event of either a passing or a big injury or disability on that key person, right? So how do we use that? What do we use? I mean, sometimes there are term policies used, but also what we have been using for the key person insurance is either IULs, index universal life policies, or whole life policies, which are a permanent policy that can, one, gain cash value, but two, provide a death benefit and just allowing us to develop a cash reserve for our business so that if anything goes wrong, um, on a personal level, that it can be used to, you know, keep our business afloat. And over here we have what fixed index annuities. Let me move this right here. It's more as a deferred compensation or a retirement vehicle, but with the money that is in an annuity, provided it is available after it's annuitized and everything. The annuity can provide funding for, a buyout, provided, say, you have a partner, they pass, um, and the annuity that you have on them, you can use it to pay out the family so that you have their, the shares of your business, that your partner had owned, and you can keep the business going, right? So, how do we do it? Who, who do we use this for, right? Founders, you and a partner or partners, it's good to have this on each other so that the business can keep going, right? Subject matter experts, be it a, you know, and alluding to a key sales employee, be it someone who handles acquisitions and is essential to your business and that, it's a key vendor or, deals with vendors, someone who's built up contacts within whatever space or industry you are in. Um, it's always nice to have something that in case we need to, something happens, we can replace them through, well, not replace them, but at least have a cash reserve so that we won't feel the pain of losing that employee or founder, CEO, or whatnot as bad, right? So yeah, and then key sales employees, the rainmaker, right? The person who can go out there and sell snow to an Eskimo. That means they're bringing in revenue. Having a key person insurance policy on them can essentially help if we lose them, right? And there's a couple different types of key person insurance. We'll get into that. But so benefits of utilizing the key man or key person insurance strategy, right? So one, operational continuity, like we had talked about already, provides immediate liquidity to offset lost revenue or cover high recruitment costs for a successor. In addition to if we lose that key employee, at least we have a cash reserve to either supplement their production for the company, or like I said, a money in the interim to help with recruiting, right? Lender investor confidence. When you have a key person insurance, you can utilize that as collateral when you're going to the banks for or venture capitalists, right? That you can use it as collateral for a loan payment, provided that you pass away prior to paying back that loan to said bank or VC, right? Um, and that protects the bank, it protects you, and it allows you as a business owner to have more access to capital, from banks or those financial institutions of which you want to borrow money from, right? Stability for credit lines, again, prevents creditors from calling in loans due to perceived management instability following a loss. Essentially, it's just guaranteeing, say, a bank is going to get their money provided you pass away prior to paying off a loan or paying off that line of credit you have, the B-lock that you have with the bank, right? And then preserving enterprise value signals to stakeholders that the firm has a proactive contingency plan for its most critical risks. At the very nitty-gritty of it, a key person insurance policy allows people, stakeholders, shareholders to see that you have planned ahead just in case something happens, right? Future planning is going to be paramount when you are a business owner because you need to be able to look ahead at unforeseen things, right? Of course, at, at lack of a better term, stuff happens. Okay. So at least with a key person insurance, we are taking care of that. So funding ownership transitions, right? Someone passes, someone wants to leave the business. So we can one use key person insurance for buy-sell agreements. Key person policies often fund legally binding buy-sell agreements. They provide the cash needed for surviving owners to buy out a deceased partner's shares from their estate, essentially saying we can pay out the spouse or whomever would receive those shares from the family. So that the business can keep going with a smooth transition, or shareholder protection, right? Prevents heirs who may lack business experience from taking over operations while ensuring they receive a fair, immediate cash valuation for their interest. Again, say you have a partner, their child is 18, your partner passes, your business partner passes, the shares go to the 18-year-old. They don't have any business experience. At least we have something to where we can just pay them out and move on with our lives, right? We want to make quick transitions for our business because we have to move at the speed of business, right? And other things we can use, right? So key person insurance, there's different types. This one right here, an executive bonus arrangement or section 162 in the tax code. Um, for a single bonus arrangement, excuse me, the company pays premiums for a policy owned by the employee. The premium is a tax deductible bonus for the employer or company and taxable income for the employee. So the employee benefit for that is portable life insurance and tax deferred cash value growth, right? Essentially, all that's saying is the company will be paying a life insurance policy for an employee, which they own, in the form of the premiums, which is seen as a bonus. You get taxed on bonuses, and then that employee now has a cash value life insurance policy that can go with them for life, that can both benefit their families as well as them, posthumously, as well as themselves while they are living. Now, a cool thing that we can use, right, is a double bonus arrangement. The company pays the policy premium and a second bonus to cover the employee's income tax on the first bonus. This results in a zero out-of-pocket cost for the key executive. It's a very powerful retention tool. They call it the golden handcuffs, as you can see right here. Essentially, you're giving your employee a bonus and you're paying their taxes for it. While also on the back end, as the employer, you can write that off your books for taxes as well. So you have a tax advantage on both sides of both sides of the coin, right? Yes, it sounds like a win-win situation, and for all intents and purposes, it is for both the key employee, and the business. Um, just making sure that everybody's taken care of. You want to take care of your best people, and that's one way to do it. So, financial risk of loss. Normally, what is suggested if we're looking into key person or key man insurance, is that the death benefit will be about 5 to 10 times what the yearly salary is of the or production is of that key employee. So therefore, we can cover 1 to 2 years of potential revenue decline, so that the business goes as smoothly as it was prior to losing that employee or CEO, what have you. And so the roadmap for this, right? So one, of course, how do we do this? One, we make an assessment on identifying critical talent, who's our best producers, who is the, cream of the crop, creme de la creme, whatever you want to call it. And then we have evaluation, right? Determine the required death benefit based on what that specific employee brings to the company revenue wise, production wise, right? Then we make a selection. We'll choose between term, which is cost effective, or permanent cash value structures. It really depends. I can't tell you which one to choose, but from my personal opinion, having a cash value permanent policy can be a little bit more beneficial, just because you have access to cash value as well, so that we have cash reserves building instead of just renting insurance in the form of a term on that employee. And then execution, of course, we secure the board's consent, or whomever the powers may be's consent to use this policy. We have this person who we are opening the key person insurance on, go through their underwriting, which at the end of the day, this is insurance. Like it says, we have to make sure that that employee can pass a medical check. And then, whatever type of key person insurance it goes through, be it executive bonus plan, key person, or buy-sell agreements. Yeah, that can go through, and we execute the completion of policy being put in force, right? Questions? Anybody? One thing, where were we at? I did want to further elaborate on. Let me just look real quick. No, I pretty much covered all of it. All right. So awesome. Going once, going twice on questions. Anybody? And sold. All right. I went through a lot of information in a short amount of time. I would um love for you guys to, listen to this over again, read the slides, do your own research as well. Education is one of our biggest things here at Truvere, and I want you guys to be educated on what is best for your businesses, this strategy can be very beneficial for a multitude of reasons, of which I think I've laid out. But if you have any more questions, please go ahead and give me a call, shoot me a text, email, reach out with to myself or any of the other strategists here at Truvere. And you know, let's put a lock on this insurance so we can get the key man insurance. All right, y'all have a good one.
Thanks, Brandon.